All right, let's jump in. All right, so today's call is a little bit late. I had obligations to the guys with the one in the 1v1 group. So those have been completed. So now we can jump in. So nothing strange. Nobody should be surprised about anything. Well, assuming you've been following the calls, nobody should be surprised about what's happening. This week, we are waiting for DXY to get here to make our next decision. We explained all of why we wanted to see that. So there's absolutely no reason to go over that again. So we're just going to brush through the daily charts briefly to look what's happening, and then we'll go into the intricacies, because from a study perspective, most of the data you need to study will be on the H1. The higher time frame is telling you what, and the lower time frames tell you how. You learn by understanding how. The what is easy. Anybody could mark up a line on a chart and say, price is drawn here, but when you try to trade it, it becomes difficult. So when you understand the what and the how, then they both come together nicely. NAS, so now, this is now the highest closing up candle for NAS. We close below, we're trading back inside. I'm very much getting bearish order block vibes from this. My thought process now is we're at a institutional level, right? 13.5. Order block is there. Validated order block. We're tracing inside the order block. Where do we go next? If you're bearish, what would you want to see to support your idea? If you're bullish, what would you want to see to support the idea? Tomorrow is Friday. We get crazy tomorrow. Options are expiring. I'm still thinking here. I'm still thinking 13,000 should be where it trades to, or it needs to sweep this low and then go higher. But for now, this low stays on my radar. I'll probably trade PM session today and look for shorts if I get them. On to the next one. AU, did it start? Can't see or hear anything. Real quickly, guys, if you can hear me, could you just say yes or no in the chat? Well, if
yes.
you can.
Yeah. Okay.
Appreciate it.
Yep.
Okay. Bam. So AU we talked about, right? So again, nothing new to discuss. We expected fair value for selling to confirm that we're gonna get lower prices. We did trade up into fair value for selling, and then it came down. We discussed the imbalance right here, which would be the very likely draw on price, and that's what we have now. So now, the only other significant portion of price to the downside is going to be this red line. Do we get price tearing through here? I don't want that. I want to see a continued consolidation between this high, or this black line, and this red line. That's what I want. So for now, we wait to see if they sweep this here, maybe a big wick back inside, back below this red line, and then we start getting price trading higher. So that's the plan for now, which means if this is the anticipated high of the range and this is the anticipated low, this is no man's land. I'm not going to buy here in the discount end because I think it's going to go lower, and selling here is a little bit risky unless you're doing it on a lower time frame. So from a higher time frame perspective, you want to keep your account alive so that when it gets here, we get a chance to make a decision. Do we get a sustained move higher? Lots of daily Zoom models trading higher, or does it completely invalidate the idea that we're going to see bullish momentum coming right here? So inside here, we wait. GJ, I still think GJ is going to get here. So today, I don't want to do anything with this, because with DXY bullish, it's expected that this guy's going to trade lower. But where we are right now, I'd rather see the sell-off start at a higher price. Does lower time frame give you a possibility to buy this as an order block, then trade higher? That idea is tempting, but for now, do nothing. Start the opening price of that candle just to stay on the safe side. It's at 161,664. So for now, we wait for that price to see if we can get a entry model forming right there. But ultimately, I want to see price trade here. If we want to sell off from here, then still, that's the focus. Lower prices for gold expected. I closed my shorts yesterday. Why? I don't know. Just felt like it. I was doing a challenge and I got to the objective, so closed. But now, zoom out a tad bit. This order flow is clearly bearish, which makes that the retracement. So now that the retracement has completely filled in this imbalance, order blocks have been validated. We're trading lower now. This is market maker model territory. First point of focus has to be that imbalance right there, and whether or not we get the strength to close below. If I was short here, this up candle's low would be where my target would have been. It was my target. I think it's about 1930 something. Yeah, thereabout. That's where I wanted to see price trade to. Now that we're here, I'm no longer interested in trading this from a higher time frame perspective, because again, origin of the move, terminus of the move, it's roughly in 50-50, and there's no imbalances here that we could use to anticipate price trading higher and then going low. So keep that in mind. Whenever the move higher or lower, or the impulse is efficiently traded like this, and you can't clearly see a portion of price that's imbalanced, it opens the door for two scenarios, in my opinion, right? No retracements and we continue going to objective, or complete invalidation of the need to go lower and this screams higher. Whenever you can't see an imbalance in a price leg, it opens the door for price to trade extremely fast and far. So there are a couple times where you might have heard me say no retracement is permitted here. This is why. But that's my target. So when we get to the lower time frame, we'll try to put that together and see what's going on there. GU completely destroyed this. Let's keep our focus on that low and whether or not we can get back above it before trading low. For lower objectives, if it never retraces, this candle's low and this imbalance. So by now, you should kind of start being able to anticipate some of the things I'm going to be talking about, because it's always going to be the same. Either price is trading towards a higher time frame imbalance or a higher time frame liquidity pool. The delivery of price gives us an idea of when it's going to start. The imbalances are always the where, and then options expiry week is when I expect the most volatility to come in. Third week of every month. You can check that out if you want. I think US 500 has finally gotten to its objective as expected. The liquidity pool has been taken here. So now I'm looking for a mirrored move from these indices. NAS took its highs just above institutional 13.5, broke low. US 500 also took its high, broke low. So now this imbalance, these lows in here, stand out as far as lower prices are expected. If it takes here, then there's nothing stopping them from taking this accumulation right here. So keep your eyes on that. Lower time frame will refine our targets. EU, the one that got away. This imbalance has been a focus. This is fair value for buying. This is sell side liquidity. inside fair value for buying. Are they buying? We don't know yet. Too much volatility pending today and tomorrow. So we have to wait to find out what's happening. What we can do in the meantime is look at lower time frames, hourly chart, 4-hour chart if you're 4-hour chart persons, and look for the liquidity inside here. Like this candle's low. Sweeping that is perfect. And then the last one, we talked about this on Monday, I believe. Whichever day. No, it couldn't be Monday. I wasn't here Monday. Tuesday. And I was saying that the most likely place that price is going to trade to is this high because it's a failure swing. Now that we're there, we've talked about where the ultimate objective is as DXY is trading higher. So now we just sit and wait. Beautiful buy setup though. Anybody who caught it would have been great. I caught some of it yesterday, but then I close. Question in the chat is what makes option expiry risky time to trade? Good question. Let me try to be as straightforward as possible. As a Forex trader or as a trader, we need volatility for the markets to move, right? No volatility means no movement. That's why we don't trade outside of kill zones, like closer to the end of the day or between midnight New York and London open. Nobody's interested in trading that time of the day because it's no volatility. Now, as volatility creeps into the market, it means more participants are coming in. The sentiment that's brought about by these participants is what creates liquidity and volatility. Let's say that. With options expiry, there's an increase in participation because if you understand how an option works, if you have an option, as you get close to expiry, you either exercise the right to use that option or it expires and you lose your money, right? So as options get closer to the expiry date, whether they're favoring what you want or not, you're going to be looking to cash out. So to make it simple, two types of options or two basic options, calls and puts. Calls go up and puts go down. So put down, easiest thing to remember. If you think the price is going to go lower, you're going to get a put, right? If you thought UCAD was going to go lower and you had a, I don't know, 2-3 month contract and it expires on Friday, like it's tomorrow, the fact that it's going higher and not lower like you expect, it's in your best interest to get rid of that contract before it screams against you and you end up losing more money, right? So the closer we get to expiration, the more persons choose to exercise that right that option presents themselves. So that's what brings the volatility. Best example is oil. Everybody believes that oil is a very good investment. The world will never stop needing oil. So you buy and hold oil call options. As the price gets higher, you're milking them for whatever they're worth. Now, if you have call options on an asset that you think is fundamentally needed or driven by demand, everybody's going to need it. Until we get wireless power, yeah. If that demand for that good is diminishing, nobody wants oil anymore, then you still have to exercise that right at the expiration to buy the oil. And if you don't have anybody to give the oil, you're gonna need to pay money to store the oil because it's literal barrels of oil. So when oil was tanking and everybody had call options, they're trying to get rid of those options by offering it at a cheaper price. And that's what drove oil prices to incredibly low things. But yeah, that's it. So now let's jump into some hourly charts. Take a look at what's happening. Let's see what's going on the chat. Takes too much capital. Yeah, it's pretty nice. You can make way more money on options, but you have to be careful. You have to be very careful. Let's add. Okay. All right. So this, I don't know if MT4 is having a problem, but I've been noticing it's freezing a lot lately, for me at least. But let's go. Again, this is that last objective that we wanted to see from DXY. Both of these were met already. This was the one that we're waiting for. It's now hit. So now we're looking for just a slight push higher to cement shaking out buyers, and then we could start making another decision. For now, we wait. It's in a liquidity pool. Liquidity pools are used for both entries and exits. So we have to wait to see what's happening. If you're bearish, however, what I would say is watch the up candle that trades into buy side liquidity. Which, very interesting question. Which one has the priority? Order flow or market structure? Order flow. Order flow. It has to be order flow. Briefly, why I'm saying order flow is if the order flow is bullish, it makes it easier to trust bullish market structure. But if you say, I'm seeing bullish market structure, so I'm going to buy, you may not necessarily be correct because the order flow can be bearish and the bullish market structure you're looking at right now is a retracement. So if you trust that, you get crushed. So that's my opinion. Order flow is greater than market structure. Talked about this as well, gold. First area, second area, both of them are here now. Where's the liquidity? Accumulation, push, retracement. This is now filled in. This is your bearish order block. I think we talked about that the last call. If you missed it, rewatch it. And there's that push. This low could get a retracement back inside here. That would be nice. It's not needed in this context because we're already very close to liquidity. I'd rather it just takes it. But if we should see it retracing, then I'd look for my entry model inside here and then try to get probably 20 points. Or I guess it's 200 points, yeah. Yesterday we talked about this imbalance on NAS and its importance. Specifically the fact that if we get a H1 candle closing below, then this is now bearish. Played around, then we got this. At this point in time, when this candle closes, we're bearish. Order flow is bearish, retrace, imbalance, lower. So now all of this and these looks very attractive for sell-side delivery. What are those blue days and numbers in your chart? Is it daily range? Yeah. So this template shows me high and low of each day. So I don't need to go to a daily chart. And the name of the day and the pip count of the daily range. That's it. Why did I choose that imbalance? This imbalance was fair value for buying the last time we broke above a previous daily's high. Daily high broken, fair value for buying, accumulation inside fair value, push. This is where they bought. When it comes back down, I want to see them buying again. Nice, nice. Comes back again in a market condition where we're expecting DXY to be bullish, which means if DXY is bullish, this guy is likely to trade lower. So if I think DXY is bullish and this is going to trade lower, how do I validate that on a chart? I want to see all the areas that are fair value for buying being destroyed. It was destroyed. There we go. We have another fair value. Oh, why are you shouting? All caps. Another fair value higher right here. Not enough volume. It's closer to fair value is closer to this. How do you validate high taken? Price trades above it. I'm just kidding. I'm just kidding. All caps usually mean shouting. But this there is more than likely a market structure shift on an M5 inside here. There we have it. I like price running back above here for PM session inside this. And I will, if my model forms inside here, I'll go short. Too low, not interested, inside here. If not, I leave it alone. That's it.
Quick question, Kish. So if you run back to the 1 hour time frame, right?
Yeah.
So this imbalance over here was fair value for buying. Also, there's another imbalance right here where we had this up candle close above the fair value, right? And then we create relative equal highs there, and then we get the sell off. Wouldn't you take this fair value as precedence over the previous one?
No. Why? This took out a daily high. This is significant. This was a lot of volume coming in the market. This volume is followed by displacement. So if we want to borrow ICT terms, the elephant entered the pool here, displacement. If this is fair value for buying, and we get order blocks being created in fair value for buying, I'm not going to sell where elephants are buying, or I'd sell here and get crushed. But once I see that they're no longer interested in buying here by closing below, then I get interested in going short. Yeah, so that's it. AU, bearish AU.
Okay, 1 second, Kish. So if you just go back 1 second
to
the one, yeah. So this push up. So we had that candle close below, that big bearish candle. Was it this morning or yesterday? Close below, right?
This one?
Yes. Then after that, we have this up close candle close above. How is that? How's that bit of price action? How do you interpret that bit of data?
Okay, fair enough. Whenever you're looking at price, you want to look at price with an assumption, or you determine whether the market is bullish or bearish. If you believe the market's bullish or bearish, first thing you need to find is confirmation that your bias or your idea is correct, right? So the idea is, for me at the time, it was if we close below here, it's in yesterday's call, you could go back there and you'd hear all of that. If we close below here, we're bearish, right? We close below. At this point in time, I'm bearish. In this range, I'm bearish, but this is the discount end of the range. We don't sell in discount. So you have to expect that this is going to happen. Doesn't always mean that you're going to be able to trade the retracement, but you expect it to happen. Where do you expect it to happen? Imbalance is created in this leg. So you could dissect all of this price action, whatever time frame you want. Look inside here, you're going to find an imbalance. Wait for price to get there, then you don't want to see them close above the imbalance. They could fill it into the pip, doesn't matter to me. Just do not close above the imbalance. Bearish bias, retracement in the premium, short. That's simple. Retracement to premium, short. What invalidates the idea here, the high of the dealing range must not be taken. This is now my trading range that we're in. The market can stay inside the range for as long as it wants. This is something that we know. Markets range a lot and it break out ever so few or often, I guess. But once we break out, retracements only happen if the range was inefficiently traded. Easiest way to find inefficiency is look for an imbalance. Inside here. Imbalance. All we have to do, wait. Game over. Got some questions in the chat. Yeah, imbalance in premium. Yeah, so that's it. So the idea is you don't want to get into we're bearish, we break below, and it needs to come right back to here, and then we go short. That's called trading levels. If you trade levels, you will hit and you will miss. When you have a level that you're watching, you want to see your entry model form there. So let's say I was an OTE trader and I have this range from there to there. That's OTE. Unless I have a limit set exactly right here, I'm not going to get this trade. No way in hell. But if I drop the M5 and this right here would have been my trade. Why would this be a trade? We're now zoomed into the trading range. This is the PM session in this gray box here. Hopefully you can see it. If I take the fib off and we look at the actual price action, so we know that this is OTE, which means something up here was pulling price. By looking at it, it's this imbalance right here. That low, that high. That's the imbalance. So if I pulled my fib on here and identified OTE, before all of this happened, I could still drop to a lower time frame, look at the levels that overlap with OTE, and wait for price to get there. No, the important thing is once I have this level, most persons are going to tell you that if you have OTE and all that, this is where you want to get your entry, and then that's great. And I'm going to tell you that this is where you want to see confirmation that you are correct. My trade idea is short. My bearish bias is confirmed. I'm expecting a retracement. OTE is identified. I want my entry model to form here. Now, you know what my entry model is. But let's say you didn't have an entry model. You're bearish. Price traded up to an area where you think it should reasonably trade back to. You want to see something here that's bearish that supports your idea. Order block, displacement, fair value gap, ICT YouTube model, game over. Done. So that's the difference between looking at price action, looking for what you want, waiting for confirmation, then being confident enough to trade the confirmation based on your model. And that's it. That's the confidence that you develop by practicing. And AU, this was a down day. I don't remember if this was the day I suggested could possibly be a breaker or something like that, but it's in the call yesterday. Anything I say is in the call. I don't plan it in advance. It's all, I'm just reading it as I see it. There's no preparation. So I might say things yesterday that I don't remember today because what inspired me to say whatever I said yesterday, I'm just not seeing it right now because the price action has already printed something else. But I can understand why I would view this as a breaker. Highs, run, close below, order pairing, order block inside order pairing, has to be bearish. EU has been bearish. Can't take credit for even calling the direction. This has been bearish, right? Everything about this is bearish. The draw on liquidity we talked about, bearish again as usual. This guy is the one that I'm really wanting to trade higher first. Really wanting to trade higher. So now looking at this, I'm seeing that it's rejecting Monday's open. That's very nice. If it rejects Monday's open, trades higher, sweeps this, then I get interested in short ideas. Long-term short ideas, like 200-300 point short ideas. But if I get it, I mean, you'll see it in the group. UCAD, we talked about this as well. Do you want to see the imbalance filled in GJ? GJ H1. Here. All right, let's take a look at this. So the last time we had a run higher, we took this day's high, but this day's high can't be counted because 2 down days shift, bullish run higher, trades back inside here, We didn't take this, did we? Did we? Let's find out. So high of that candle, 564, high of this candle, 568. So relatively equal, just a small poke above it. I'd still want to see them raid this. This accumulation, I want to see them raid that, and then I get interested in going short. Outside of that, I don't think this is going to stop that order flow. I think manipulation is going to come in heavy. There was a whole lot of buying at 159. I think it was the week before. Yeah, this week. There's a whole lot of buying right here. Where were they targeting? Can't be here. Has to be something from over here. So if we put that low into perspective, then it's still just above there. So I'm not interested unless we get here. I'll trade everything else and I don't care about GJ. Horizontal black lines you draw on your chart. I'm new here. If you're asking about these, they're the daily highs and lows. If you're talking about this broken line here, then it's the opening of whatever candle is here. So if I click that, push O, opening after candle comes in. UCAD, talked about this yesterday as well. So there we have it. US 30, this looks very open. This candle's high. All of this looks open to me. I like the idea of going down here. Same thing with this guy. It's a whole lot of sell side liquidity building up inside here. And NAS M5. Oh, NAS is in imbalance now. Okay, cool. So if my entry model forms, I'm going to take this. What do I want to see here to go short? So this imbalance is clearly being filled in. Tag that low. I don't need to tag this high because it's already there, right? I'd like to see a wick, but not closing above here. This is a 5-minute, it's a 1-minute candle. We have 27 seconds before that closes. So if we tag here and then the very next candle trades below this candle's low, I'm gonna go short the next candle. If this, then that. No, I'm gonna sell this high, madness. Right on time, wink, wink.
You can repeat that again, please.
What exactly? Wink, wink. I want to see an up candle touch this low. I don't like when the up candles that touch the low are so big because it means I have to wait all of 20 points before I get confirmation. So let's go advanced market structure. One, two, three, four. If your trade model not formed, nope. My trade model is my edge. I've done great things with it. If it doesn't form, then the market can enjoy it in whatever it wants to do. Not interested in shorting unless we get back above here. Do one more time for good measure and I sell. If not, then this just happens without me and that's fine. Here's the imbalance that straight into. There, imbalance tagged 12:14 in the next 27 seconds. Let's see what's gonna happen. What do I think is gonna happen? The next candle opens, wicks into here again, then it gets back above here. don't you combine order block? I don't trade order blocks unless they're formed in fair value. So that low. No, not signals, right? We're just talking about what I want to see. So there's no clear trade yet. $12.15 and it's still stalling. Whatever it's doing, it's gonna do it without me. But so far, what I expect is happening. Next candle open, wicked it, and then moving higher. Why do you mean OB4 being fair value? It's a little trick that I figured out. FG below those two successive OB, can't we combine? Wait, here we see below those two successive OB. Two successive OBs. I'm not sure what you mean here. I'm sorry. The lines I marked. These? No. This could be an order block. The reason I'm not expecting this to be an order block is because this candle didn't touch that line. This candle did. So for fun, I could just buy this right now, just because, and trust the narrative that it's going to go higher. Somebody's in the chat and they said, not that, the one extreme left here. So you're asking if I would use these as the order block? Good point. You see, because I don't trade order blocks per se a lot, I'm more of a fair value gap person. I wouldn't be looking at that order block. I'd look at the imbalance beside it and I'd look for price to fill it before we get a continuation low. But our lovely talk is gonna come to an end here. Still expect this to go up here. And yeah, thank you guys for coming out. Enjoy the rest of your days and peace.